Hello and welcome to my YouTube channel. My name is Senzo, and today's video is about an imbalance. Today I'm gonna teach you what is an imbalance and how to find an imbalance, on how to see the area where there is an imbalance on the price chart. Okay, this thing is simple. Remember, I always said this on my video that trading should be so simple, should not be difficult. Okay, so every time when I explain, I try and explain and take the time to explain and make sure everybody understand. Okay, basically the imbalance is when the market or when the price has moved in one direction. Okay, let's get straight into the chart so that you're gonna understand what is an imbalance is. Okay, I'm gonna mark this candle. I hope you see this candle. Okay, let me zoom. I hope you see these three bullish candles. You can see the market here. The market here is only moving in one direction, only moving to the upside. You can see only green candles. But on an imbalance, if there was a candle here, the bullish candle with a tail, if there was a candle with a tail like this, if this candle had a tail like this, if this candle had a tail like this, there would be no imbalance here, because that means there was a sell, or there was sellers also involved in this area. If there was a tail on this candle, there shouldn't be imbalance here, because that will mean that there was sellers in this area. So what we do is, let me try and remove this. Okay, what we look for, you can see on this first green candle, you can see there is a small doji candle here. For us to mark an imbalance, what we do, we can take it from the tip of the tail of this indecision candle. I'm gonna mark it like this. Which means this area is an imbalance, because there is no selling, only buying. Only buying was happening here. Only the buying, only pull or only buyers was involved here. There's no sellers. So this area we consider is as an imbalance. So what we do, we mark the 50% of the imbalance. It means we pull the fib from this tail of this candle, this indecision candle, to the tail of this candle. Then at the 50%, that is our imbalance area. So we know if the price moves to the upside, we know that it will come back, maybe in future or later on, it will come back to close the imbalance. So the imbalance basically is an area where the market has moved in one direction. As you can see here, the market is only moving to the upside. No tail, only the market was moving to the upside. So we got an imbalance in this area, because the market was only moving to the upside. basically all these candles here, there's an imbalance here because there's no sellers here. There's no sellers. The market has to balance itself. Every time it has to balance itself. The algorithm is set like that, that it has to balance itself. So as it moving to the upside, they say they have to come back and close the imbalance area. They'll have to come back and close the imbalance area. So basically the imbalance is an area where the market is moving only in one direction, as it is no, if it's moving to the upside, or it's bullish market only moving to the upside, that means there's no bearish candle or there's no tail cover that area. So as there's no tail cover that area, there's no tail on this side, there's no tail on this next candle covering this area, it means this area is an imbalance area, which means the market in future or anytime it will come back and close this imbalance. So that is an imbalance area. That also applies on a sell or on a bearish market. Okay, basically on the bearish market, you can see this area, how the market is moved to the downside. You can see this huge move to the downside, this huge, very huge move. Okay, here we got a tail, here. Okay, let me make an example that you can see. Okay, what we're gonna do here in order for us to spot an imbalance, we're gonna mark from the tail of this candle. You can see this candle, this small one, this small candle. We put our horizontal line on this tail, and we're also gonna mark this tail of this candle where the buyers was at. Okay, so we're also gonna mark this tail. Mark this tail of this candle. Okay, now the imbalance that we left with is this area, which is very small, but the markets like to come back and also fill the small imbalance area. We'll see what has happened. The market came back and it's filled the imbalance area, and it went all the way up. So basically the imbalance, when the market is moved only in one direction, doesn't matter whether it's 2 or 3 candles. If the candle doesn't have the tail, that's we got an imbalance in that area. Even if it's one candle, if that one candle is just a long candle with no tail either on the left or on the right, we consider that area as an imbalance. So we use that area, sometimes we use that area for the probability that the market might return back to it in order to mitigate. So basically when that area is near the order block or is next to the order block, we know that order block is a very strong order block, because the market has to come and mitigate, or has to come first and close the imbalance, and also it has to come and fill and mitigate the order. If you don't know what is mitigate, you have to watch my video where I'm explaining what is mitigation or what is mitigate. Okay guys, I hope you understand what is an imbalance. The imbalance basically is an area, or it's when the market is moving in one direction, no tail, whether on the left or on the right. No tail. If there is a tail and the tail does not cover the whole candle, that space between those two tails, that is an imbalance. Vice versa on a downtrend or on the bearish candles. Okay, that's all about an imbalance. I hope you understand. Keep watching my video, subscribe. press the notification bell